Hey, it's Mack with PriceActionTradingSystem.com, and this is Thursday. It's July 17th. This will be a chart lesson today. Another really good trading day today. Um, we had a nice, and it was the typical MO that we've been seeing almost every day. They started up early in the overnight, and then soon after the market opens, it starts selling off. Uh, Lately, some of the sell-ups have been strong. This one was pretty strong. This one was fairly strong, although it ended up being a kind of a range day. The previous day, it kind of just got hung up. But that's been the MO lately, is they kind of take it up early, and then after the market opens, they sell it off. And so you just be aware of that happening. But if you follow the trends and the trend lines, and this turned out just to be kind of a spike and a little bit of a channel here, um, and then you had the break, the move to a new high, and then man, you don't know this is coming, but if you're following the rules and trading it, it comes. And I know some of you understood what was going on because I got two or three comments that hey, you had the best trading day ever, and that you were reading it perfectly, you understood exactly what was going on. I had somebody ask me about going short right here. Well, this is a little bit too early going short right here. Um, you were better off to wait on the failed second entry long. Notice there's two legs back, so that's the second entry long right there that failed. And then on the bigger picture, this actual picture here, you got another push up. So that's your real failed second entry long. This is also a breakout pullback short. So they went short right here. When it bounced, they got a little bit worried, and but it still worked out. And like I said, you don't know this watershed sell-off is coming. But if you're trading and doing the right things, it does. And then I also had another trader ask me about going long right here. Well, that's breaking the most common rule we have is you don't go long in a downtrend. You don't counter trend trade. And notice this is the first break of the trend line. Yeah, we bounced at a kind of the overnight low, but this is not a range. I mean, it could turn out to be a range day, but when prices are selling off like this is a strong downtrend. And when you get a sell off that strong, even after the break of the channel or the trend line, you're almost always going to get a retest to the low. Sure, this thing could have broke higher and went higher, but you're gambling. You're taking a chance that that's going to happen because the rules tell us you can't go long here. So just sit tight and see if you don't get the trap like you did get, and then go short. And look what I mean, easiest trade ever. But and you go long here, you're just gambling. So I hope that is clear to you. We are not gamblers. And if you gamble, you are going to lose money. And when you start trying to pick bottoms and pick tops, you're gambling. So make sure you understand that. But let's talk about the trades. I'm going to go through these pretty quickly. I'm going to talk about one or two little other things that I think are real important, and then we'll wrap today up. But when I came in, we already had the break of this channel and moved to a new low, and we were working up in this little channel right here. There's a failed second entry short here after the break and the new low, and that's when I'm waiting. Notice I got my first two swings. That draws a trend line, and this is the third touch and bounce off of it's the confirmation. So when it broke higher here, you drop a limit order in there. It didn't quite close on its high. You're having to go long close to the high, so use a limit order. And that's why this pulls back, is because most of the traders are trying to get a better entry price just in case it goes higher and fails. And it made me a little nervous. It's sitting here bouncing around, but look, it breaks on out, it goes higher. You actually might have considered going long here because that's the first break of this little channel, so you're probably going to push higher, but it doesn't come back. There's nothing. I just think it was too risky, even though it did try to go. It really is close enough to be a two-legged pullback to the EMA. And so, aggressive trader might take it, but I just don't think it's worth risking. Not when you've already had a good entry here and you've already got a little money in your can. If you're holding a runner, maybe you risk it, but no way that, I'm just not going to go long on that one right there. Now, you got these two swings here, so when it comes back and confirms that trend line, and notice it's a two-legged pullback, there's that little trap below this double bottom. Now that one I like, and you go long right there, another easy trade, and then it pulls back, and obviously, hopefully you understand why you can't go long. right there. There's a second entry long right there, but look at your little short-term trend line. That's the first really time it closed outside, then it pushes to a new low, and then it breaks higher. And so I like that one to the long side, and it takes off, and look at it run up. And then now you got a break of both of these, a new high. Notice this little, it pushes up, it makes that double top, and then it makes that real bearish bar. It was real tempting to go short right there. And a lady did send me an email and saying, I think I hope she didn't scratch this trade because her stop should have been here, and she went short here, and it backed up. And she sent me an email saying, what did I miss here? But she really didn't miss anything. She just was early. And that's why I like to wait on that failed second entry long, which came here. Notice this is a double top, and notice there's two legs right there, and so that's like on a smaller picture, that's a second entry long. So there's your first real failure or trap, and it's a breakout pullback short because there's a lot of overlap right in there. So she didn't read it wrong. She just was a little bit early, and sometimes that'll get you because sometimes if you're early, it'll run up there and it'll make that one tick higher or that one tick lower right here, and you get stopped out only to see it go right where you thought. So she was just a little early here. Better to wait on this one. This is where I wanted to enter right here, and it still backed up a little bit before it took off. And if you missed that one, now you got a couple of swings and another confirmation, and look at that bearish bar right there. Um, but you could have gone short right under that little doji because now you got your true failure, and it's working this trend line. It's below the EMA coming back to test it. I really like that. So I didn't know it was going to do this, obviously, but man, what a trade! And I was a little late getting out the midday trade because I held a runner on this, and obviously you probably know my target was right here. And that's where I exited it. So I actually exited on this bar right here. So I missed a few ticks of it, but if you can get that whole move right there, it doesn't get any better than that. And there was actually chances to add on, or if you didn't catch the first move, it's this week's strong sell-off now, and you're looking for any reason to get short. And I like going short here or adding on. And then there's even a breakout pullback short here. It's a little more aggressive because there's a chance it could bounce and go to the other side of the trend line before it goes down or back to the EMA. But this is almost like a new swing high. It's not a new high, but like a new swing high. And then you get a first entry, and then it pulls back, and it's like a second. And this is like a breakout pullback short for this little double bottom. It's right off that midline. If you see it working down through there, I usually, when I find the lows and highs, I usually put a line in the middle, just finding that middle, and it's probably a little bit higher, like right there. And you can see it pulled back and tested it, and off to the races it goes. And where does it bounce? Right off that line again at the low. And this time you get your break, but realize how strong that sell-off is. And you got the bounce because of the overnight low that people know it's going to bounce, but it could have reversed out of here, but on a sell-off that strong, you can't take a chance of going longer. It's not even a good long setup. Now the guy that asked me about it, maybe his chart looked better. There's not really even a second entry long. There's a second entry long if you're counting off the lows, but you got a channel working up here, so you got to follow the channel rules. Sure, there's a chance it could go test the highs, but I'm not gambling on that for anything because I know the odds are we're testing this low. So I'm sitting tight, and by sitting tight, you catch this trap. There's actually a short right here, and I'll be honest. Notice that the first entry it pulls back. There's a second entry. Look how bearish that bar is. I made this one green. Every fiber in my body wanted to go short right there, and it did get just enough to scalp out. But I skipped that trade. I wasn't gonna. I had some other stuff going on. I wasn't gonna add on a risky trade. So I just sat tight, and then it goes lower again. Then you get a chance to add on. Look at this. You got them trapped to the upside. This was previous days. There were some lows in there before. You see that right across there. So, there's reasons why it's finding resistance here. Notice how each one of these highs is a little bit lower than the last one turns down. I mean, that's, where we're headed. And you don't know it's going to go that fast. And then there's even a little breakout. Notice when it broke below, it kind of made a little double bottom there, and it broke below, pulled back, and you get a breakout pull back short. And you know you're going to go at least here, and it just keeps on going. So just get as much of it as you can. So, but yeah, I'm not going to risk a long here when I just made all this money on the way down. So why do I want to go long right there and take a chance of risking that loss when I know that even though we might get a measured leg up in the end, we're probably going to test this low. And so by going long there, you're breaking the most important rule we have, is which is don't counter trend trade, and then you're gambling. And if you gambling as a day trader, you're going to lose money. You might, if you catch this and it is the low of the day, it's going to pay off good. And you might occasionally catch that. But what I can promise you is going to happen more often than not is that you're going to lose. You're going to only, it's only going to work often enough to keep you trying to perfect a losing trade. So don't go long right there. That's the first break of your trend line. Channeling. This is a big, strong downtrend. Look at that. It's like a waterfall. This is what you want to catch. And and if you miss it, it usually gives you a second opportunity. Like right here, you still could make really good money on just those two, or just this one. You catch a runner and you ride it all the way, and you just exit even at one tick. You got 3-4 points there. And then now look, you got your break, you got your move to a new low. There's a second entry long counting off this low. First push up, pull back. So you're going to get another, and you know you're probably coming back to the EMA. The fact that it didn't even get to the midline, that's pretty strong. I think again, this is a very risky trade, but I know that there's some aggressive guys. Now you got your reasons to go long because you got your break, your move to a new low, and there's a couple of legs there. And so now you know it'll probably come back to the EMA even if you're going to get another leg down, and there's plenty of room. So I know a lot of people are going to like that trade, and I wouldn't take it, not after I've made all that money on the way down. But if you hadn't made any money, you're coming in late, or you'd like to take aggressive trades, this is where you want to take it, way away from the EMA, not right here on the EMA, because you know it's going to snap back before long. And then you get a failed second entry short. It bounces right off that trend line. Boy, I love this setup right here. You really could have gone long just above that doji. And that's what I did. But if you didn't, you wait on this one and just put a stop right there. Um, Breaks up, pulls back just a hair. So you even could have got in one tick into this ball with a limit order. But I wouldn't risk that. Once you saw this ball right here, I'd put a stop because you know you're probably going to the upper side of the channel. And if you just copy this line and drag it up, it was fitting perfect right across those highs. And nice, easy trade. It's a trap. It's a short trap because, everybody that watched and missed this all the way down that doesn't understand price action decides they want to get in right here. They're not going to miss the next one. And guess what? They get trapped, and it's going the other way. You have to understand what's going on. This is very predictable, but you have to understand it, and you have to be able to read the price action, and you have to know the tricks that they play because it's just a game. It's just like a video game. There's there's tricks, and they use them every day, but you have to learn all this stuff. And that was the last trade I had marked today. There was a first entry long right there. I don't know if you want to take that one. Would have worked, but once you get this thing starting to move, I'm generally going to wait. On my second entry. But you notice that you really didn't get that on this move or this move. You might have considered this one even though it didn't break lower, simply because this is not a very wide channel and the market's pretty strong now. They're running, all the people that were getting short that are hanging on hoping it continues to go lower, they're running their stops, and they'll keep running them and probably run it all the way. We'll probably close right back up here in the middle of all this somewhere. Wouldn't surprise me at all. We could go lower again, but I'm guessing that they had their sell-off fun and they got it down to a good buying price, and now they're buying it again. And wouldn't surprise me at all if we don't end up somewhere within these highs and these lows before the day is over. And draw your trend line and just keep following it. And when it changes, it changes. Go with it when it changes. For now, it's up. There's no reason to be thinking anything but up right now. There's your trend line. Just extend it a little further, and maybe this is even a little higher than what I had it. Notice that we overshot it just a little bit while we undershot it about the same amount down here to the low side. And you'll see that sometimes it'll overshoot that amount and it'll overshoot the same amount, but you'll get some kind of measured move out of it, then that's measured because it overshoots it about that much, so then it undershoots it about that much. It could be the fact that we keep overshooting it. Don't rule this out. It could be you go up to a measured move. It could be a two-tiered channel right here, and this may be a midline. So that's something you got to consider. The fact, when you keep overshooting it, if you suddenly get some support off this and it goes higher and you get a little short trap or something, take it because you're probably headed the other direction to the other side, which is going to, and this is just a midline or whatever that it keeps bouncing off of. So keep that in mind. Um, but really good trading day, and I know some of you saw it. I know some of you, traded it and had had great success. And it was a really good day. And but I wanted to share one other thing with you. I did. Let me see if I'm gonna pause this a minute. Now the trader didn't send me a copy of his chart, but I'm pretty sure he was talking about right here. He saw this as a second entry long, and on this chart it might have been, but notice my chart, there's no break. This is a first entry long. Although it is clearly a two-legged move, and if you went to a smaller chart, there would probably be clearly a second entry long right here. But on a big down move like that, and this is the first break, this is what you expect to happen, and then trap everybody to the long side and it run down to a new low. So that's a good learning lesson right there. Look, there's a great bounce off this low right here, and a lot of traders will trade both sides of this thing. I don't like to, because look what happened here. After a move that strong, you would expect it to get back to the EMA or here, and if you'd have went long in here, you might have gotten trapped and then it's headed lower. So I don't buy those lows. When it's this strong, all I'm doing is looking to sell, and if I get a good entry, I'm gonna hang on to my runner, and I've got a target somewhere, and it's usually when it hits back here to the other side of the channel. And so when this thing got right here close, and this bar turned up, I'm exiting. And it could have still gone lower, but you can't be greedy and try to get it all. The main reason you're looking to exit is because this is the low of the day, and you're probably going to get a bounce there too. So remember those previous days, and all across here, there's some previous days, highs and lows and opens and things like that we're finding resistance against. So keep that and look at it. We're still going. So I'm guessing that this is probably going to head to the other side of the channel. This is too strong for this probably not to be. I mean, it could turn back down here, and this could be a big double overshoot. But I'm guessing we're going to find resistance on this side up here somewhere. So one other thing I want to talk about, and then I'm going to wrap up today, and we'll be back to do it tomorrow, and then we'll go into into the weekend. So let me pause it one more time. Actually, I don't really need to pause it. I'm just going to open this. I got this email. I'm not going to say who I got it from. A long time ago, I used to get his daily comments and things. This is a guy like a floor trader that teaches, and I think he's a legitimate guy. And I'm not going to call his name because I don't want to say anything negative about him. But he's always talking about how the market is rigged, and he sends out something that's still rigged. Somebody may get this stuff, so you'll know who I'm talking about if you do. It doesn't matter because I'm not beating him down, but I'm just going to show you. I want to talk about it for a certain reason. I'll tell you that. But he's talking about the HFT, the high frequency trading algorithms and things, and how people say the market's rigged, and it very well may be. But it doesn't matter. If you can read this chart and you can understand what's going on, it doesn't matter if it's rigged. That's what I keep trying to tell people. I don't use the DOM. I don't care anything about the DOM. Now I will look at the current ask and bid, and I'll see all the time. You'll see all of a sudden there'll be 500 on the ask and 800 on the bid. And then suddenly you'll see 2,000 or 3,000 jump up there for just a split second, and then they disappear. And yeah, those are algorithms popping those things in and out of there. So don't let that fool you. If the trend is up and the price action and our rules say go long, then you want to be going long, and you don't care so I don't even use the DOM. I've never looked at the DOM. I don't care about it because all it'll do is confuse you. All that matters is the price action. And they might be able to hide what they're doing at the moment, but everything those high frequency traders do leaves a footprint. And these are just footprints. And it's just like learning to track a wild game or wild animal. Some people are experts at that. They've learned to track the footprints and understand what they're telling them about wild game. Well, this is very similar. We've learned to understand the footprints and to be able to follow them. That's all we're doing is following along with these footprints. And they give you reversal patterns. They tell you when to be prepared for a reversal, when to start looking for it. No, you don't know exactly when it's coming, but that's why we don't gamble and start buying lows. We wait until there's a video, I put it on there. If you hadn't gone and watched that lesson in the premium section yet, it talks about how to recognize these reversals. First, you get the clue that it's coming by the break of the trend line and the new low, and then you just wait on that failed second entry short. And when it comes, there's still people thinking about getting short here. Where once I saw this break and this low, I'm just sitting on my hands, and I'm hoping that I'll get a failed second entry short with a nice bullish bar, and I go long and look. It's all here. So it doesn't matter if it's rigged. It doesn't matter. As long as you can read the chart and you can follow the footprints and follow the tracks that the high frequency rig traders leave, because they can't hide that. Yes, they can. They might try to fool you right here where prices are actually at right now, but they can't hide the fact that they've reversed this thing and it's going higher. They can't hide that. And guaranteed, you watch, it's going to get somewhere along this um, upper side of this channel, and that's when it'll correct. It may pull back and correct first, but it's eventually going to get to the other side of this channel. I'm almost 100% certain. It could finally sell off and not get there, but I'm betting you it gets there. It might even overshoot it some. But I'm betting it gets there before it's over. I mean, we were talking about it way down here when it overshot it. Look, it's still going higher. They might be able to hide what's happening right up through these bars, but they can't hide the fact that the trend line broke a new low and they trapped everybody on a failed second entry short, and we've been working higher ever since. They can't hide that. And so understand that it doesn't matter if it's rigged. It doesn't matter. Um, we don't care which way it's going. It could be selling off. We can make money just as easy, or it could be going up. We can make money just as easily no matter what it's doing. But the key to all of it is understanding how to draw these channels, how to understand when the break has come, how to understand when the reversal is finished. There's clues when this makes this new high and it starts hanging right here. There's clues that it's probably going to reverse. But don't try to sneak in early and gamble. Wait till you get the trap, because you could end up with a day like this one where you got the break and it looked like it was going to reverse, and it did, but it didn't reverse by much, and it's just real choppy. So you could get hung up in something like that. So understand that it doesn't always reverse on a dime like it kind of did here. Sometimes it takes a while for the momentum to reverse, because there's still a lot of people there's still a buying frenzy because this thing was rallying, and everything is still for the most part above the EMA. But notice how you didn't get a lot of rejection right here. You didn't really get a lot here at first, and so that's the first one that's kind of telling you. But look at the rejection right there. Look at the rejection right there. And then it finally did reject it, but it worked through it a little bit, and that's your first clue. And then this time it worked through it, and it started closing below it. And so that's your other clue. So make sure that you understand all that. It takes time, but I hope that makes sense to you. So you know, even if some people say the market's rigged, and they may be 100% right, it might be rigged. But I will say this person mostly is talking about day trading stocks, and some of the stuff he does talk about with stocks, as far as trying to trade stocks, um, based on the way they trade, it probably does matter if it's rigged. But the way we're trading, we don't care. We're only trying to get 4 ticks. We're only trying to get a piece of all of these moves, and and hopefully catch a runner where when you get a runner, it goes like this. You get most all of that move. And looking at this where it turned down now, this could be right across there. And maybe this is a little bit lower here. So it might be like that. So that might be all we're going to get there to the upside. That's a pretty good move though. But when it broke above here and then got above and kept going, you know that the target's somewhere up here. But if I wasn't out of this trade yet, I probably would have exited when this bar, as soon as this doji formed, right? Actually, once this one formed, I might have put my stop there, and then when this formed, I'd move it up under there, and eventually it'll turn down, and you get stopped out. And it could turn and go higher for one more push, and maybe this is up there. But if you do it the way I just described, you're generally going to get the biggest part of that move, and you don't have to sit here and gamble and let it take it all back by thinking it's going to go higher. So hope that makes sense. Again, once you start getting close to your target, if you're not sure yet, just start moving your stop up a tick or two below each of the bars as they close. These are still really bullish looking, but when you get this one, that's where I'd put my first one, then this one, and you'll save yourself from it backing on up. And if you get another entry, another setup to go long, you can go long again. But for now, you got all of that move, or 90 or most of it if you do what I just explained to you. So again, the tracks and what the people that move, we can't move the market. Understand that an average retail trader trading a couple of contracts here and there cannot move the market. So all we want to do is figure out where it's going and get on and ride with it and get a piece of it. We probably can't get it all. It's almost impossible. But you'd be surprised how sometimes we do get almost all of it, but you can't get all of it every time. So as long as you get your scalp and get at least a piece, then we should be happy. If you get a runner, that's gravy. And, get as much of that runner as you can, but don't be so greedy that you give it all back, because I made that mistake the other day. And it's the first time I made it in a long time, but I made it. So sometimes you get greedy and you think the prices are going somewhere and you turn out you're wrong. But really all we have to know is where it's going short term, and we only need it to go 4 ticks in the direction we want it to go. And so look at either one of these entries here and these moves. Easy get 4 ticks, easy get 3, 4 points out of them, much less 4 ticks. Look at these moves coming down. These are great moves. And so just understand that, greed and fear is what drives this thing. All this is a picture of the greed and fear moving down, but it's tracks of the traders that can move the market. We can't move it again, but the people that can, and they might be able to hide where they're going short term and what they're doing at the moment, but they can't hide where they've been and how they've done it. And so you can study their tracks to basically learn their techniques. And that's what we've done with price action. We've studied it and watched it so long that I understand what they're doing. I know what they're doing. I don't get it right 100% of the time, but 90% of the time I know what they're going to do, and I get it right, and I go get a piece of it. And that's where that's your goal, is to learn to be able to figure out what they're doing. And the idea is to get weak traders to try to buy these lows and sell these highs, or buy these highs and sell these lows or whatever. And you sell a low, and I guarantee there's no telling how many traders that are probably still sitting on a short right now that got short right here, and they're refusing to believe that they got tricked. And they'll watch this go and go, and they're praying and hoping it comes back. When you find yourself hoping and praying that prices come back, close that trade immediately. And a lot of times you may close it and it may end up going right back where you thought, but it only takes 1 or 2 times that it doesn't, and you wipe out. You make 10 great trades and you have 1 lapse and you refuse to admit you're wrong and you give it all back. That was my biggest hurdle to get over as a trader. So I've been there. I know that. I learned to spot I learned the tricks pretty quickly, and I caught on to price action fairly quickly. But what would happen was, when I did make a mistake, I would refuse to admit I was wrong, and I would hang on longer than I should, and I would give too much back. And I literally, I could go And I've had as many as, I don't even want to say, because people, I don't want to stir all that up, but trust me, I've had many more than 25 or 30 winning trades in a row, and then turn around and make a Dumbo move and give half that money back on one single loss when you shouldn't give back but 2 points, if you even give that back. So it happens. It happens to even good traders. You have those brain freezes, but you got to get disciplined enough, and that's what I had to do. I had to force myself to be disciplined enough to admit, hey, when I'm wrong, I got to exit. I can't take a chance. Why give all my money back? And most of the time when I was wrong and I gave a lot of my money back, I would look at the end of the day and I would say, how stupid was that? Even if I would have just closed it at double what at 4 points instead of two, I wouldn't have lost but 4 points. Instead, I lost 10 points or 12 points or 15. Don't do that, especially not if you're trying to be a scalper, because you will never be successful, because if you're giving back that much on your losers, you got to have 90%, 95% winners to be able to overcome that. But if you don't lose more than a couple of points, and you can get it down to 75 or 80% and still make money pretty fairly consistently. So, and if you can get it down to where most of your losses are a point to 6 ticks, then you may not need but 70 or 75% wins, and you can still make a living. And people will argue that, argue it. But I tell you, it works, because I've done it. I've been in all those categories over time, and I've done it. And but I found that I enjoy being 90% better or right and never giving back more than 2 points, and I'm good to go. And occasionally I'll still give a few ticks more than 2 points, but you're not ever going to see me sit on a trade like being short right here and watch this thing go, because I know I learned the hard way what happens on that. You end up blowing your account or something worse. So don't do it. But I hope this was a good learning opportunity today. Great trading day. Glad some of y'all had success. Those of you didn't, you just got more work to do. Keep working on it. Follow the rules. Understand that it's what's happening here. This is a game. It's an expensive game if you don't play it properly, but it's a game, and you have to learn how to play the game, and you have to learn how to read and follow the tracks of the guys that are moving the market. If they're high frequency traders, so be it. Somebody has the buying power to move this thing. And those are the people's games that we're playing. We're playing their game. They created the game. It's their game. It's their rules. They create it. So we got to learn their rules and learn to play their game and learn to read the tracks, and so you can understand where they're headed and what they're trying to do. And when you do that, suddenly, and you might think, I want to say this too, this is getting to be a long lesson, but you might think you're close because you're doing well on sim, and then you flip over. I've gotten several notes lately saying I get on sim and I have no problem, and I flip over to live, and suddenly I have a brain freeze and I can't even get one winning trade. But it won't do me any good to go back to sim, because I always make money there. Well, it may feel like you're ready because you're doing good at sim, but here's what I always suggest to people. If you're at that point, clear out your sim account and set it at $5,000 or $10,000. Really, the lower the better, because that keeps you from being able to play games and doubling down and all that. If you're winning and doing good on sim because you're doubling down and getting lucky like that, then you can't do that trading live. So you're wasting your time. You're not going to be able to do that when you go live. So you're just fooling yourself. However, if you're coming in here and you're trading, following the rules, and you do real well on sim, but when you flip over to live, you start losing. That's a mental thing. That's the motions. And so even though it may feel like you're ready, you're not there yet. So just accept that you're not there yet. Get back on sim and keep getting that experience. Set your account to $5,000 or $10,000, so you got a goal to work towards. And when you can double that, maybe even double it a couple of times, then maybe you're ready to flip over to live and start just scalping singles. Start small, because you are going to have that when it's your real money on the line. It's inevitable that you're going to have that little jittery feeling. But if you just trade singles and you follow the rules, you'll get past that jittery feeling pretty quickly. It may take you a while before you can go to two contracts or start trying to hold on to runners, but just start with singles and just scalp out on every trade and get used to trading live. Don't jump in there and trade five contracts or three contracts or 10 contracts or 20 because most people can't do that. Some people will, but most people can't because they they get too emotional about it. And I'm going to say this too, and I'm hesitant to say it because I don't want anybody to give up too early, but this is a skill. It's a learned skill. And some people just may not be able to have the skill set to do it. I'm not convinced of that yet. I think most people just give up and or they run out of money too soon and they can't stick to it long enough because it's not that but it's not that difficult of a skill once the light goes off and you understand what we're doing. But it's still a skill, and it's just like professional baseball player. I could go out and practice every day, all day long for hours. But who am I fooling? I don't have the skill to be a professional. My arm's not strong enough. I can't throw the ball that hard. So even though I might be able to step in there and learn to bat, I don't have a strong enough arm to make it in the major league. So I'm never going to be a professional baseball player. So it doesn't matter if I practice for years and years and years or the rest of my life all day every day. I'm not going to be good enough. I don't have the skill. So maybe trading is the same. I'm still not convinced of that because this is more of a mental skill than it is a physical skill. And I think most people have the mental capacity to do this. I think where some people struggle is the emotional part of it. So maybe everybody doesn't have the emotional skill set to do this. And that may be why you can do it on sim. But I could do it on sim long before I could do it live. So I'm still not convinced that that's a piece of it. But I'm not willing to sit here and say too that I think anybody can do this because obviously some people can't. And is it because they didn't stick with it long enough, or is it because they truly just do not have the capability or the skills to do it? Because it is a skill, it's a learned skill. And so I'm still up in the air about that one. I don't want to mislead anybody. I know I champion hanging in there and staying with it because it does take a long time and it is a very difficult thing to get over that hump, but it can be done because I know people that have done it, and including myself. I mean, I struggled. I mean, I could do it on sim long before I could do it live as well. So if you can do it on sim, I believe there's some people that can't even do it on sim. So if you can do it on sim, I do believe that you can eventually learn to do it live because all you got to do is get the mental fortitude to be able to do the same thing live that you did trading on sim. You'll enter on right here on this when it's on sim, but when it gets live, you're scared. You want to do the things that you want to do when you're before you learned. I don't know how to word that. You want to do the things that have common sense. You start wanting to see it prove it's going higher again before you. But once it proves that it's too late, then it backs up. So you have to be able to do the same exact thing live or on sim that you're doing while you're live. And if you flip to live and you can't do the same things and you start losing, then you simply have not trained that, that your memory well enough to do it yet. So, I mean, that was the way it was with me. I would have the um, discipline when I'm sim trading, but I'd flip to live and, I might have it for a trade or two and then I lose that discipline and I make a little simple mental error and, I couldn't figure it out. But looking back on it now, I understand I just wasn't ready yet. Even though I was getting really good at sim, I still didn't have enough experience. I still hadn't had enough pain uh, to understand. I mean, that's what makes you stop trying to go long right here and waiting to see what happens uh, and looking for a long trap to go short is the pain. Nothing helps better than pain. So when you feel that pain and you're wrong, it really changes things. At least that's what changed me to say, hey, I got to follow the rules no matter what my head's telling me, stick with my gut feel and follow the rules. And I mean, I say that all the time is that, somebody will ask me, why didn't you enter right there? And I say, it was just a gut feel. Why didn't I go short right here? Because we had a break of a trend line, a new low, and my gut feel says it's time for the reversal. And so I'm going, it may have turned down and gone without me. That happens sometimes. But my gut feel says we're going to get a trap here. So you sit tight, and next thing you know, it's going the other way. So sometimes it's just a gut feel based on experience and having seen it do it every day, day after day after day after day after day. And some of you just don't have enough of those days in there. And even though you might tell me you've got 2 years or 3 years, that's nothing. Think how long a doctor or a lawyer goes to school to learn their trade. Years, years and years. And then they still have to get out and build their practice and get clients. And they don't get rich overnight. They still have to build that practice. And the trading is just, it pays better than that. And it's half the stress and half the worry. And, work when you want, don't work when you want. You don't have to deal with any people. So it's a better profession than being a doctor or a lawyer if you're successful at it. And it pays better. So don't think it's going to be any easier if then or everybody'd be doing it. So it's a very, very difficult skill to learn. So understand that. But I've been on my soapbox for 15 minutes now. I'm getting off. I'm calling it a day. I'm gonna go enjoy my day. I'm got some other business things I'm working on. So I'm trying to get wrapped up here by 1 o'clock each day. But I hope you had a good trading day. We'll be back to do it tomorrow. But I'm out of here. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.